Did you know that Taiwan Semiconductor Manufacturing Company, or TSMC, produces over 50% of semiconductors worldwide for various companies? And that 100% of Nvidia's profitable H100 GPUs are produced right now by TSMC, and the majority of AMD's competing MI300s? Let's compare the New York Stock Exchange listed TSM, as it is known here, to the better-known Nvidia and AMD. While Nvidia is currently firing on all engines, especially with demand outstripping supply for its H100 chips, its stock price has shot up massively by 239% in the past year and 31% in the past month. And it's starting to have a high price-to-earnings ratio. Even with many analysts' buy recommendations, strictly from a numbers point, it is overvalued right now. Despite this, the stock is up today, February 2, 2024 by 4.97%. So, maybe the market is throwing all the old metrics out. As for AMD, when their Q4 results for 2023 came out on January 30th, it showed encouraging results for the sales of MI300s. But the gaming segment was down 17% and the embedded segment was down 24%. Their CEO also said that those segments are expected to be weak for the first half of the year. Even with the ramp-up of their GPU, it would seem to be more of a second half of the year type of stock. I am very undecided for this stock for Q1 of 2024 because it had an on-target EPS of 77 cents. But, it has not yet grown into its forward P/E of 43. However, once again, the market has decided today, February 2nd, to bump the stock up by 4.21%. If you look at Taiwan Semiconductor, however, from a strictly numbers point of view, it would appear to be the better buy. The semiconductor sector was up 73% as a whole in 2023, while TSM was up only 45%, and now most of the sector is overvalued, with TSM being one of the few exceptions. It's up by 2.08% today, Friday, though. When TSM's Q4 financials for 2023 came out a week and a half ago, it caused a spike in most of the stocks in the sector. While revenue and net income dipped year over year, its revenue was up over the previous quarter by a higher than expected 14.4%. Supported by the strong ramp-up of their new industry-leading 3-nanometer chip-producing technology. CEO of Taiwan Semiconducting, C.C. Wei, acknowledged that 2023 was challenging for the company. Because some of their clients, such as Samsung Electronics and SK Hynix, had declines due to the post-pandemic plunge in demand for consumer electronics like smartphones and laptops. That resulted in smartphone and PC makers grappling with excess inventories of chips and less production for TSM. However, analysts are now saying that chip inventories at smartphone and PC makers are running down and expect restocking demand to pick up. C.C. Wei added that, "We expect 2024 to be a healthy growth year for TSMC, supported by continuous strong ramp-up of our industry-leading 3-nanometer technologies, strong demand for the 5-nanometer technologies and robust AI-related demand." He projects first-quarter revenue to come in between $18 and $18.8 billion this year. We should also consider the breadth and depth of the customer base that TSM has. TSMC's top 10 customers accounted for 62% of its revenue and its largest customer, Apple, contributed 14%. This means that TSMC is not overly dependent on any single customer, and it can benefit from the growth of different segments and products. Their other customers include Nvidia, AMD, Intel, Qualcomm, Broadcom, ARM, and about a dozen more companies. And they produce a lot of different chips, from chips for the iPhone, to graphics cards, to CPUs like the Ryzen, to chips for Intel, to the H100 for Nvidia, to wireless chips, computer processors, automotive and industrial chips, and more. So, they are very diversified. If one of their customers is losing market share to another of their customers, they end up not losing. When you couple that with their low P/E of 22 and domination of the semiconductor sector with 58% of the market, how can you go wrong?